so we're going to get some heavy lifting done. And asking my favorite AI companion, ChatGPT, what is the bank reconciliation statement? And it said the following. So we're going to just read through this. So a bank reconciliation statement, and we always call it the bank recon statement, is a document that compares the company's or the business's cash book balance that has to do with the bank columns only with the bank statement. So we get our bank statement from the bank, and of course, we prepare our own cash book. Whatever money goes in the bank column of our cash book is what should be the same reflected in our bank statement. However, this is not always the case. Bank Recon, it helps to identify and explain differences between the two balances to ensure accuracy in the financial records. So the purpose is to detect errors, prevent fraud, track outstanding items, and ensures accuracy. And what could cause the bank statement that we get from the bank, of course, and our cash book statement, or cash book with the bank's column to be different. So there could be uncleared checks, deposits in transit, bank charges, direct deposits, and errors in recording. And of course, there are different formats for the bank reconciliation statement. There are two of them, and it is basically the same thing. Only thing we do is we shuffle things around a bit, but I will show you those two in a bit. All right, so the bank reconciliation statement, as the word says, reconcile, is where we're going to reconcile the bank columns of our cash book with that of the bank statement. We get the bank statement from the bank to know how much money is in our account, what has been happening in our account, and of course, we prepare our cash book with the bank columns. So let us compare something now. All right. It is important to note something here. Whatever is on our receipt side of our cash book, which is the debit side of our cash book, will be on the credit side of our bank statement. That's important to note. Whatever is on our debit side in our books will be on the credit side of the bank statement. And similarly, if that's the case, then whatever is on the credit side of our cash book or our payment side will be on the debit side in the bank statement. And that makes perfect sense because every debit entry must have a corresponding credit entry. And that's the reason why if in the real world someone says that they're going to credit your bank account, it means you're going to get money. Because on your bank statement, it is credited, means it is increasing your amount of money in the bank, but you record it in your business cash book on the debit side. So let that sink in for a while. And then we're going to look at some other things. Let us examine the bank statement because, of course, we have done the cash book for. So here we can see December 1, we received some money. And of course, that means we have $24,000. We got a further $1,000, then a $5,000. So you can see our balances are increasing. And then, of course, we had to pay some money. And we paid $3,000, then $4,500, and $4,000. That gave us a balance of $18,500. So if you're looking at the part that says balances, let me just use my spotlight to highlight that right now. You realize that here, increase, increase, increase. Then once it's debit, decrease, decrease, decrease. And of course, the last increase on December 31, we got some money from Y Samuel's $2,000. So the balance, and the balance, what we call balance carried down, according to our bank statement, is $20,500. So remember that, $20,500. Let us compare what we have in our cash book that we would have prepared ourselves. So here goes. It's a different balance. Look at this. Our balance here is $11,550. So there something is wrong. You see this in your bank statement and your cash book. You're wondering what could cause this. There are more than one things, but let us look at how we can sort this out and then we deduce how all of this difference could happen in the first place. The first step in doing the bank reconciliation statement is you're going to check items in the bank statement, but not in your cash book. So that is going to be your step one. So we're going to look at that now. What is in our bank statement, but not in our cash book? So let's go. 24, we have 24 there. The 1,000 there, remember, debit to credit, the 5,000, and the 5,000 there. All right, but we don't have that $2,000. You see that? So we don't have that. So we need to add that. All right, let's go to the other side now to see what we have. All right, so the $3,000, we're not seeing that $3,000. So we're going to put an X there instead. So an X there. All right, we're seeing the 4,500. We're seeing the $4,000. So step two is whatever is in the bank statement, but not in cash book, please add to your adjusted cash book. So now we're going to add these two things to our cash book, and that should make it easier for us. So those are the first two steps, and we're going to do what these steps say. So we are going to add K Fletcher on the credit side because it is on the debit side of our bank statement. And Y Samuels on the credit side of our bank statement will go on the debit side of our adjusted cash book. So let us work on that now. So remember, we're going to add two things. We're going to add Y Samuels and K Fletcher to our adjusted cash book. So let's go. We put back the same cash book. We write back the whatever we had first, and now we're going to continue. So we add K Fletcher. Remember, whatever K Fletcher was on the debit side of the bank statement, so we put that on the credit side of our cash book. Y Samuels is on the credit side of our bank statement. That means it will go on the debit side of our cash book. So those are the two items that we needed. So now what we're going to have to do is balance off. And now we see we have a balance of 10,550. And we draw our total line because our debit side was 32,500. Our credit side was smaller. Did the balance carry down? And now we have our totals. But let us check something. The balances still do not agree. If we look here, it is 20,500 and 10,550. So something is still not correct. So now we have to look at what is in our cash book, but not in our bank statement. That is our step 3. Let's go. 3,000 here, 3,000 there. 4,500 here, 4,500 there. 4,000 here, 4,000 there. So there's it. We don't have this 10,500 for wages. Now, this means that this is an unpresented check. So on the credit side of our cash book, we have something, we have what it will be called unpresented check, because we did not carry this check into the bank. So we paid it late. As a result, it's not reflecting in our bank statement. And you can see it was on December 23. So, wow, we need to bring in that unpresented check. Now let us go to the debit side of our cash book and credit side of our bank statement. So we have the 24,000, we have the 1,000, we have the 5,000, We have the 2,000, but we do not have the $550 from S. James. So now we're seeing what we don't have on the debit side. The debit side, of course, we're getting money. When we get money into our bank, it is called a lodgement. But this seems to have not been gone in, so it's called a late lodgement. So on our debit side, we will have late lodgement, and on our credit side, we'll have unpresented check. So there's a formula that we're going to use, and this formula is always used whenever you're doing the bank recon. It does not change any at all. So what we have to always remember now is what were our balances. So 20,500 for our bank statement, and for our cash book, it was 10,550. So take a note of those. Jot them down. Balance as per bank statement is 20,500, and the balance as per our cash book is 10,550. And now we're going to look at how we're going to arrive at what we call the bank reconciliation statement. So let's go. When I teach my students, I tell them that you can use this to remember. So we have colb and block. What does that mean? That means balance as per cash book, unpresented check, late lodgement should equal back to your balance as per bank statement. Let it make sense first, and then we'll go back to that. So here we go. The balance as per cash book, I told you to write it down, was 10,550. Now we're going to go on to the U, which is unpresented check. Unpresented check was 10,500. Then we have late lodgement. So to add these two, you get 21,050. Then we less our late lodgement we get for 550. We will come back to the balance as per bank statement figure. So if we small this and we look, remember, unpresented check, 10,500, and it was the unpresented check will always be on this side. And of course, the late lodgement will always be on this side, the debit side or the receipt side. And there we have it. So I always tell them block or colb. We just did colb, CULB, balance as per cash book for the C, unpresented check, then late lodgement, and then bank statement. Let's go on. Bank statement, late lodgement, unpresented check, balance as per cash book. So let's go. Banks as per bank statement was 20,500. We're going to add L, our late lodgement, 550. We add that, we're going to subtract our U, unpresented check, which is 10,500, and then that should give us back the balance as per cash book at the 10,550. So it is as pretty straightforward as that, and that's how we do it. So it's just simple arithmetic, and now the balances have been reconciled. All right, so I hope this video was helpful.